Welcome to our pivot episode, and this is Trader One at your service. Today we shall be discussing about REITs. You may have already seen a lot of YouTube videos out there about REITs, the enabling law behind it, and the benefits of investing in them. After all, the first REITs IPO was almost 4 years ago. But what we're going to focus on here is how to buy them more efficiently. Sapat na ba ang peso cost averaging? Anyways, sabi naman ng iba, long-term dapat ang view mo if you're investing in REITs. Or is there a better way? That's what we're going to find out. In this video, we will discuss two methods to better buy REITs. The first one involves some trading. This may not appeal to everyone since I understand that most who enter into REITs simply want to buy and hold and build passive income over the long term. But please keep an open mind first, since this method will give you a better average over time. Once you have built a comfortable average, then you can proceed with the usual buy and hold approach. This is not your typical charting which buys at the lows and sells at the high. Medyo mahirapin yan because you really never know when the low is and then when the high is. In this method, we have a benchmark involved. Disclaimer, this is not a perfect model. There will always be room for improvement. You may adopt what I'm about to share and tweak it to your own liking. This might not be the best and most optimal because no one really knows what that is. But I think that this is better than the usual. Plus, it will help you build the knowledge and create the attitude for learning. I encourage you to watch this video 2 or 3 times. Marami po kasing technical details na nandito and tinatry po nating maintindihan, mihuan, whether beginner ka man or advanced. Kasi yan naman po ang goal natin dito. In my own way, I want to help empower small investors. In this exercise, we shall be using a REIT as the prime example. Excited? Let's dive in. The first one anchors on your buying and or selling based on the dividend yield of the specific REIT you are interested in. Diba sometimes you will hear stock picking based on relative valuation tools like PE ratio, price to book, price to net asset value, and so on. For technicians naman, they would say support and resistance at this price. It's also the same here. Pero may hard basis ka. So ano ang hard basis natin ito? Enter risk-free investments from government securities. You can see here from the table below that there are different government securities with different maturities. Different being yung yields niya. No? So you can choose here from 1 year, 2 years, 5 years, and so on. And then my corresponding yield siya before taxes. No? So, logically, compared to a dividend-yielding stock or a REIT, merong risk dito, diba? So, if you compare the two, dapat the yield that you will be getting from a REIT or a dividend-yielding stock must be higher compared to a yield from government securities. So, konting math muna tayo. Ano ba ang dividend yield? Dividend yield is dividend per share divided by the price per share of a stock or a REIT, expressed as a percentage. No. Assumin meron ka ng forecasted dividend per share. You get that from your broker, the broker A or broker B. So they have, let's say, a forecast of the dividend per share for 2024. So you use that. So importante yun as your input in computing for the dividend yield. Also, kung wala kang access sa mga ganung reports, you can annualize the most recent dividend declaration. So, diba, let's say si a REIT gives quarterly dividend declarations. So, whatever the last one, let's say yung ito, for me, the declaration of 56 cents, multiply that by 4, so that's your forecasted dividend per share for 2024. Divide that by the price, that is your dividend yield. So 2 variables yan, no? So the price and the dividend per share. Now, for the dividend per share, that moves when there are changes in the fundamentals of the stock. So yung mga brokers nyo, they will revise their outlook, their forecast earnings and dividends based on factors affecting the company, like in vacancy rates, kung nag-improve ba or nag-decrease, there was a renegotiation of rates with the tenants, or may asset infusion from the sponsor REIT, from the sponsor company. So those are factors that change the forecast. Now, assuming lock-in ka na, based on your estimate or based on the broker's estimate, ang gumagalaw na lang dyan is the price, right? So for the price, the lower the price, the higher the yield. Now, as the price moves up, the yield becomes lower. So yun yung imo-monitor natin ngayon. So what would be the best yield to enter into? Compare that to the government securities yields. So dapat may cushion ka doon or may buffer ka compared to the government securities. That's where we buy the stock or buy the REIT. So what now is a good buffer? Enter inflation. Diba, as we all know, inflation is high and it eats up on what we have. No? So the things that you buy a year ago, 2 years ago, is not the same price as today. Kasi because of that inflation. So that general increase in the price, we have to impute that in our yield forecast or in our expectations when we buy or sell our REITs or stocks. No. Now, what do we check to get the inflation? Obviously, the Banco Central is the authority in this. If you read some reports, the news, they always say their inflation outlook. Monthly, nagsasabi yan kung ano yung inflation and then their expectations. And they say the reasons behind it. Now, for purposes of this exercise, what we only need is their forecast for the year, yung outlook nila. And they have said, time and again, that their target range for inflation rate is 2% to 4%. So 2 to 4% ang inflation outlook nila for 2024. So we use that to impute in our formula for this. No? So what's a good one? So 2 to 4 again. So we just pick which one we are more comfortable in. Do you want to be conservative and just use 2%? Or do you want to be more aggressive para ma-shelter ka from higher inflation for the remainder of the year? So you used 4%. Now, so there are a range. So it's up to you now what inflation or buffer you would use. So going back to the government securities, if you choose, let's say, the 1-year maturity, that's about a yield of 6.06% gross. You less the tax component, it now becomes 4.85%. Then now we add our inflation expectation buffer. Let's say for purposes of this, you choose the midpoint, the 3%. So your yield now, your buying yield would be 7.85%. Now, of course, tatanungin nyo, why not price in the price appreciation of the stock? You can also impute that. But for this exercise, that becomes your bonus. No? If it goes higher by 20%, then well and good. But if it goes down, then at least your yield is safe. Now, let's put that 7.85% yield into action. I will show you here the share price of a REIT since its IPO. Well, if you can look at the rightmost portion, that's where your 7.85% yield is at. Well, that would be a share price of 30.50. And as of end June 2024, the share price is 34.55. No? So that means that probably you can buy now if you want a good price or a good yield of 7.85. I also tabulated there the other yields though at 2% and at 4%. No? So if you want to be more aggressive in protecting your downside risk there. No? So at 2%, that's 35 pesos yung REIT. Well, you should be buying now. Or you can wait at a lower price, so that's 27 pesos, around 27 pesos, if you want a yield at the 4% inflation target, which gives you a yield of 8.85%. Now, this is forecasted, so you may want to buy now, so you would get a 7.85 yield. Now, if we look at the yields since IPO, you would see here that at 27 pesos, the yield was around 6.3% forecasted. And during the highs of around 50, the yield is just 4.3%. It's not a perfect capture of the lows and the highs, but at least it gives you an idea when to buy or when to sell. At 6%, perhaps at that time, that could have been a good yield already, but definitely at 4.3% at Wahals or 4.2% at the high, medyo mag-iisip ka na, do you still accumulate at that price? Knowing that the share price could continue to move higher, or it could fall eventually. No, but at 4.2% forecasted yield, at that time you have that information already, you can ask yourself, would I still buy? Would I still accumulate? Would I still DCA? Or maybe perhaps stop na muna, stop buying and then look at lower levels. I hope the first method is clear to you. Comment down below your thoughts and questions and I will try to answer them. Thank you. I hope this video helps you in your journey to financial freedom. Comment down below your thoughts and reactions. I get ideas from your feedback. Click like if you enjoyed the video or learned something new. Please share this video with your loved ones and investing friends. Subscribe if you're interested to learn more. Again, this is Trader One, and I will see you in the next one.